I hope you all can see my screen. Okay, nice to have you all here again in this master session. So this session it's gonna be about the checklist you need to ensure to enter a trade. So this is probably one of the best risk management strategies we actually need to talk about, and I'm gonna give you like 8 or 10 tips. You just need to make sure whenever you just gonna place an order in the market. It's international. I mean, it's universal. That doesn't really regardless. It depends on the market. Okay. So first things first. I have it all here on my thing. You can get this indicator or something. You don't really need to do, but you can have something like this. But I'll just share you this on my chart. Okay. The first thing we just gonna see is the first step is this one. This is really so essential for you to just to sustain in the longer run. The reason behind that is like a lot of people are losing a lot. It's mainly because of their emotions. Everything seems to be well. I mean, your strategies and literally every fucking thing in the market seems to be really good. Like all your confidence and stuff, but the crowd really loses. It's mainly because of their emotions. It's actually demons in the market. You just gotta eradicate it somehow. Maybe in experience, or maybe you have to do a mindful session some days. So make sure you just eradicate your emotions on the first step and get a mindful face. Just tune into some good audios or some BGMs, which I personally suggest you guys to do so. Get a quiet environment and just get into hyper focus mode. You really don't want to waste your time spending in the chart. You just need to get the hyper focus, whereas you can do 2 3 hour work in like 30 minutes or 1 hour, depends on you. So it's subjective. So just make sure you just check on your psychology on the first step. So that is gonna be your first one, which is so essential. The next one, we are moving on to the session. So this one is also pretty important. So we're going to talk about three major sessions in the financial market. Of course, you guys know about that. The first one is NYC, and the second one is London, and the third one is Asia. So they actually have a theory based on these ones. So what they actually like to say is Asia holds, New York, London pumps, and New York dumps. So this actually kind of correlated to every time frame in the market. It doesn't need to follow the patterns every time, but this actually likely happens in most of the time frame when you check the market, especially in forex and indexes and all. So that means in Asia session, you'll see less volatility, so you'll not be able to find some good setups as compared to the London and NYC. And we are right now in the NYC session where the liquidity just pulls out the way and just give us an impulsive moves on the both sides. So try to take a trade in London or New York. Uh, doesn't mean that you don't want to take a trade in Asia, but just get a focus on these two time frames, and especially make a note on the openings of both these time frames. Just keep a clock or something like that. London opening, New York opening, and likewise the closing of both of the time frames. I mean both of the sessions. So these times the market is gonna give an impulsive move right away. So these stuffs you just got to make sure on the second note, the session. So we are right now in the NYC one. So we have got cleared the first one and we have got cleared the second one. And moving on to the market structure. About this, check the daily. Just for the idea, you don't need to do an analysis here. Just for an idea, and just check the 4 hour and check the trend. Market structure is nothing but the trend. You got to make sure that you analyze the trend perfectly, like whether it's forming a lower low, lower high, or which direction it's likely gonna go to. So this one is overall. This one is on a higher trend. Like this one, the movement is really high. The movement is upward on the longer run. You don't need to calculate this fix in between. It doesn't matter. Just check the trend. Just take a trend line or something. Just draw something like this, and yeah, you're good. So this one is forming a higher high and higher low on a 2 hour 4 hour time frames. So something like this. Yes. So we have the 4 hour. So you gotta know that this one is likely to go up, and in the other way around, you also know that this one already did a good move in the market. So it's pretty much late to catch this pump just for the time being. So what we can also do is check the levels something here, and it's almost touch the resistance, I mean the support here. So we're likely not to have any trade on the daily and 4 hour if the trend is still intact. Now we'll come into the 1 hour, and yeah, we are seeing the same pattern here. Okay, so on the 1 hour, it says the same picture for us. We are likely to go up. So these are the important levels here. This one is the third one I'll be talking about later. So make sure to identify the trend first, and then you gotta move on to the next one. The time frame. I mean the time frame which you want to trade. I mean if you are a swing trader or intraday or you're gonna scalp, you just gotta make sure you play in between these time frames. So imagine, like, assume that I'm gonna scalp now, just get into 15, and then you gotta do whatever the key levels which you want to do. So I'll be explaining about it the next. And this is one, and this one is, we don't need to jump on 4. Okay, let's stick with 1. Okay, so I got the time frame now. So what I need to do next is I need to mark the key levels, means support and resistance, and the important levels which the market is likely going to react when it kisses that level. So let me pull off the stuff again and take whatever you wish. Like you can draw something like this. And okay, so these are the levels which I am seeing which really has a good liquidity area stuck here. So I'm just gonna place a line here, and if I find something which is equally good, I'll be aiming for this one. Okay, we got it. This one, you can clearly see the price gave a breakout above this, and it just respected properly on the previous resistance and gave a proper support on here. So these are the two levels which you're going to play off now, and the next level you can also pull off the 4 hour and mark the next levels based on the previous swing. That is over here. And I can also keep this one since it has a good VIX as a support. So I'm just gonna put one more line here. So this is likely gonna reverse the price when the price touches on this zone, which is 29,390. So we got the 4 key levels right now. So what we're gonna do, whatever trade we're gonna trade, we're just gonna trade off these levels. We don't want to go above and we don't want to come down. So imagine we are keeping a good risk reward strategy, like good long order, short order. It should be in this in between these zones. Try not to go beyond these zones. Of course, you don't want to be, because this one is for daily, so you don't actually want to be. So 1 hour. So what price really said is, we can literally see a breakout here. Liquidity was stuck up here on this zone, and this was one of the, this is also one liquidity area. We got 2, and this is one liquidity area. Means price has reacted a lot. So whenever price reaches these zones, it's gonna react. Either it's gonna give a breakout. Most likely, the breakout is not gonna happen on the first attempt. So what happens is, like, the first attempt, when it touches the area, it's gonna reverse off to the older resistance, and then it's gonna form a wave, and then it's gonna be choppy for a while, and then it's gonna give us a proper pump. So we just witnessed something here. So this is one major resistance zone. You can literally see these 3 things. Let me pull off this one. 1, 2, and 3. So this, so you can see 3 major reversals on the zone, exactly on the zone. So whenever there is like 1 or 2 attempts, so most of the time the 4th attempt it's going to be a breakout. It's either it's a breakout or it's a fake out. 90% it's going to be a breakout. There are chances it could be also a fake out, but it's going to be most probably a breakout. So for that, it actually needs to get like twice or thrice on the resistance and reverse off to the previous resistance, and that is here. You can see these areas, right? So price actually came here, and it just it took off all the liquidity in here, and then it actually gave a breakout. So check these ones first, and now we actually got a breakout. So what we can expect now is it is gonna pull up something here. Try to draw trend lines between trend lines. If it works for you, something like this. So the next scenario which is gonna happen is something like this. We don't have any imbalance also here. So this one is a major support. The zone here, which you could see there are a lot of wicks here, line here, which price is not allowing the price to go or breach beyond this zone. So this one is likely to be the reversal zone. So if I'm gonna enter long trade, so I'll simply place my long order here on these zones, which is also called as order blocks, and I'll be aiming to the next zone which we marked, the final zone which we marked. So by now, I guess you guys would have got an idea on how to actually trade the trend lines. So if I'm likely going to enter long trade, I'll just simply wait. I just do an order block here. The first step is the trend line, and then just to mark the important zones, the key zones, which I drew here. And the next one is trend lines between trend lines, which will give you guys an idea on where to take a trade and not take a trade. And I just kept my long order here. Okay. The stop loss, it could be below these trend lines. If you're gonna put a tight stop loss, you could also try something here, but most likely it's not gonna just exactly reverse here. It might try to hunt down your stop loss and then it could reverse. So what you do is try for like something like this. So you got a wick here. I'm just gonna delete these stuffs. It's so confusing for you. Okay. Okay, so we got the perfect market structure now. We identify the trends and we just concluded with which time frames we're gonna trade, and that is 1 hour. And then we just analyzed the key levels, the support and resistance. You could use any indicator or any stuff based on your confidence which you want to do. The next one, we have to check the volatility. So that is also pretty significant here because we need to make sure the market is really going to move. We want to wait in the trade for like 100 years, and so imagine if I'm taking something here and look at what's happening here. It literally plays with your emotions, right? So you don't actually really wanted to enter a market where there is like less volatility. So try to get in here when you see some big candles, some sort of candles like this, and escape with a, like a 1:2 or 1:3 risk reward. You don't want more about that. So I'm keeping my stop loss here, and this is gonna be my entry zone. So what I'll do is I'll exactly not enter here. So what I'll do is I'll just set like 2-3 orders over here, and when it hits here, I'll be entering like 30%, and when it reaches here, I'll be entering remaining 30, and I'll be I'll be full on the trade when it hits the least level, the final entry target which I likely wanted to be in the trade, which is a potential good risk reward. So I'm just keeping it right in the between. Perfect. Okay. So we just follow these set of rules in the beginning, and we just identified the trend, and we just done with our checklist on these stuffs. So the next one, I talked about the volatility. There are a lot of indicators of volatility, but you don't really need them to check the volatility. So as I likely told, like to check the volatility, you need to make sure which session you're in, whether in NYC or whether in London opening or which session. So I told you about that, right? So London pumps and NYC dumps. This doesn't happen every time. I'm just repeating it, but most of the time it follows the same pattern. So try to take any trades in these time frames and confluence volatility and session and create your own strategy. So this 8 types is actually done. And the next one, which I'll be moving on, is the risk to reward. I mean the strategy. So as you all know, there are many types of traders in the market. We don't really need to stick with one strategy or patterns and just be arrogant in the move, because not all the times market plays with your specific strategy. Sometimes the market is so scrap and choppy. So switch strategies, like have like 2-3 some strategies which has a strong conviction on your side, and never really rely upon like 100 strategies and test everything, and you'll literally get lost. So try not doing that. So strategy is the one which I'm talking about. just make sure whether your strategy fits in on your time frame on this market structure. If it's not, then just simply not take the trade. If imagine if I'm gonna trade order blocks or imbalance, like based on me, because I'm a SMC trader. So if I'm gonna trade these liquidity, I'm just simply gonna wait till here. I'm not gonna chase here. And if you check price action, or if you check some different types of trading, there'll be one more entry over here. It'll be giving you a signal here too, but it doesn't follow my pattern, or it doesn't follow the rule which I likely have in the market. So I'm just not going to do that. So wait for these levels and try to take a trade with your own strategy. And there are many. So once this is done, the next step, these two are like these two are the best ones in the risk management. Like you have to be having you got to be super cautious on these two last ones, the risk to reward and the EST. I'll be talking about EST on the last. So the risk to reward means, like, for an example, I am gonna take a trade. Okay, okay, so we have the pattern here. So imagine I told you about this one, right? So we can also enter a trade here, since it's the candle is really bullish. I mean, the momentum is really high on this one, but this one is FOMC candle, so we don't take this onto consideration. We have to wait till the volatility actually decreases, or we have to wait till the next day to check or perceive the right direction. So this one is one trade one. We can jump on. We can jump on to this trade right now, and stop loss will be right here, right? Above these. You can also keep here. You can also keep here, the fix over here, or the fix over here, or the fix over here. But if I meant, like how I said about the quality, you have to aim for the discounted price. You don't wanna be jumping onto unquality in quality setup, like, and aim like a quick 1 or 2% move with like a 2% stop loss. That doesn't work in the market all the time. Most of the time, it just hits your stop loss. So make sure you don't do something like this and keep a stop loss something somewhere here. It's easily gonna look what's happening here. It's gonna hit your stop loss now. So you don't want to do that. This is literally a live example of one-on-one reason why you not enter long trade here. So this one is pretty volatile. Lol, what's happening? FOMC is on the place. Look what happened exactly here. The order block which I told you. You saw the candle, you can tell here, and it exactly reversed till here. This is not gonna happen all the day. I mean, this is gonna happen all most of the time, but especially not on these news days, because news days are literally manipulated. We don't want to be trading. I just simply restrain myself from trading on these days. Uh, so check what's happening here. Yeah. I'll talk about that on the last one, the EST strategy. So I'll be talking about that on the last one. So the risk to reward. I just okay. I'll just move on to something blank. Let's have like 2 3 types of risk to reward. Okay. Let's stick with three now for an intraday, and yeah, just for an intraday. And let's keep this as two. Yeah, let's keep this as two. And yeah, so you got three risk to reward. I mean, the same levels. Why you gonna trade? Imagine you're gonna take a trade here. You got three setups now. So if you're gonna choose this one over these two ones, but I'll just tell you guys something about this. Setups like this, you're not gonna get every time in the market, but when you get, you gotta be super aggressive on these setups. uh, you'll get something like this every day, like literally, even in scalp and something like that, you literally get these setups every day, and you don't wanna choose this one over this one. So try to stick with this one or this one. This is 1:3, and this is 1:2, and this is 1:1. 1:1 is literally almost like kind of gambling for me, at least, because you don't want to lose 1%. You just don't want to gain 1% in a stop loss of 1%. It's merely gambling. So I'm just going to eradicate this, so delete. So ensure you just have a proper risk to reward, like at least 1:2.5. I don't even recommend 2. have like a least of 1 is to 2.5. So for this, you gotta make sure you get the best entry. And look what's happening here. I just showed you how the order blocks work. I just told you the price is literally gonna react here and it's gonna reverse here. So you can just capture a quick scalp, something like that. So what I'll be doing is in FOMC I'll try to scalp. I don't really wanna hold trades in an intraday perspective. So what I'll do, I'll just set my orders over these levels and I'll just simply be aiming for like 1%, 1 point, max to max 1% move. And 1% is already done. And on these I don't really care about stop loss because it's actually, if you see something like this, it's actually gonna retrace a bit and then it's gonna dump. It's not gonna likely to fall like a London Bridge. So I'll just jump onto I'll just jump onto a scalp with the 1% of profit and with like 10-20x leverage and just play off the market until I'll be exit done for the day. So make sure you just get a good risk to reward setup, and that is so significant in this market. You all don't realize about this, but this plays a huge and vital role in the market. Try to catch the bottom. You just see the market like a Black Friday discounted entry zone. Uh, you want to get everything in discount, right? You don't want to get something which is so priced high. So just try to get in a discounted zones and wait for the trade. Be patient. That is one of the factors you just need to have emotionally. You've got to be having a solid stuff on that. Never be emotion and have a good disciplined way to just wait like a cheetah in the market. So we just covered off these ones. And the last but not the least, this is so important, the EST, entry, stop, and target. So you all may think why I had stop before the target. So we don't actually want to aim the target first. So what we have to do here is we just have to check the entry and we just got to see the stop. Like ask yourself, like assume I'm going to take a trade here, like ask yourself like where is my stop loss going to be rather than where is my targets going to be. You don't want to aim the targets. You just want to make sure where is your stop loss. So if I'm going to enter here, my stop loss is likely here. So if my trade is like, if the market is likely here, like I just don't want to, I'll just simply not show the skin out what's happening in the bottom. So let's assume we are here and you're going to enter it. You just saw the market gave a breakout about these liquidity zones. So you just saw it's likely to go above. So what you likely aim is the higher side. You just aim for the target. You just see the price over here, which is gonna happen. So either you see the price and you don't worry about the stop loss because you don't want to lose. So that's your mindset. So you just simply not give up much importance to the stop loss side. So what everyone does is like they give only the focus on the target side. So that's one of the reasons why many people are losing. So what I'll do is I'll just invert the scale. So I just eradicate this side and imagine I'm going to enter. I'll just aim for my stop loss first. That's my target because I don't want to lose. I need to make sure that I don't want to lose in this trade. I don't care about the targets, but I need to make sure my stop loss is really good in a good position where I'm not gonna just blow up my funds and lose like a heavy amount in this trade. So I just kept my mindset to stop loss as a target. So I just aim for the stop loss now. For this, your stop loss got to be the least. On the target, yeah, of course it manually needs to be high, but on your stop loss it got to be the least. Your stop loss should be small in the sense, don't be too optimistic and keep a short stop loss, something about here and something about here and keep like 0.51. It doesn't work that way. Stop loss, you have to capture the perfect entry. So as I told you, the discounted entry. So I'll just ask myself, where is the stop loss? So imagine if I'm entering here, according to me the stop loss is actually here and your target is here. Are you going to enter this trade? Are you still going to enter this trade? No. You'll be the dumbest. Yeah. So you don't want to do that. Yeah. So what people do is like they don't keep this stop loss. Like that's where you gotta be good on those levels. So you gotta know these levels, or you gotta have your strategies with those EMAs and everything. So they'll tell you everything where your stop loss should be. So you don't want to keep it here. So what people actually think is, imagine they just saw the price here. They just saw the pressure here. So they don't want to think about the downside. What's gonna happen? 99% they're just aiming for the top. So what they'll do, they'll just enter the trade here with like stop loss of like one or like literally 1%, and they say this is like good risk to reward, and they justify like this one is a really a good setup and it has a good risk to reward. But now hell no, this doesn't even fit your entry properly. Just you lost in the first step on your entry and you hit your stop loss, and yeah, you're done on this trade and you lost. So you don't want to do that. I'll keep here. So what I'll do, I'll simply not take this trade. So what I'll be doing, I just explained you on the previous one. So I'll be waiting for this level which I told you, and I just mark these order block right and look how price reacting. So I'll just aim for one. Sometimes I could also aim till here. The stop loss. Stop loss will be around here. Yep, yep, yep. Go ahead. It's not gonna be dumb. Yeah. Yeah. I'd suggest you to set your limits because you don't wanna just get into a clash. Like literally, you'll get lost and thrown away in the market. So what I'll do is, so imagine I'm entering here. So I just set my levels here. So this one is me. This one is my first target, and I just keep something over here. So I'll just try to exit in a slab. I'll not hold the trade till the last because that is also a dumb move which you're gonna do. You just have to enjoy your profits along the way. You don't wanna lose the trade. So first things first, I'll just try to secure my capital. So what I'll do is I'll like literally exit 50 to 60% of my port on the TP1. This is TP1 and imagine this is TP2 and this one is TP3. So I just simply set the levels on the broker and I'll just give the person and you'll be seeing the percentage down in the broker, whichever one you're using, and you just act and work like that. Got it? Yep, yep, yep. You could take anywhere you want. It doesn't matter. You could also pull out like 10% of your trade. It's all versatile. You don't need to worry about that. It's not like once you enter, either it's heaven or either it's hell. Nah. Yeah. Yep. So make sure you actually work on this EST. So saying it again, aim for the entry, aim for the stop loss. Don't aim for the target. Aim for the stop loss. Check where your stop loss is. The lesser it is, the profitable you're gonna be. And don't be optimistic and say keep it here and keep a lesser stop loss and say my stop loss is less. That's where I explain all these stuffs here, the key levels, right? So you gotta be having a good conviction on these key levels and everything. Just backtest a lot. Try on these markets and just go back literally there is patterns over here and try to avoid these patterns. You don't want to take these patterns. This is literally low volatility. We don't have any volume here and you could literally see stop loss being hit on both sides. You could see here, right, the VIX. So you take a long trade and they hit your stop loss. You take a short trade thinking like this assume this one was pretty big on red candle when it was happening and people thought it's going to be a downfall and look what happened. This is how they manipulate you. Yeah, it literally went up immediately. So you don't want to do that. So try to avoid trades on these. You don't really want to trade every day. It doesn't matter. Like all the pro traders out there, they know when to not trade rather than when to trade. So yeah, it's all correlated to everything which I said, right? Learn the stuff which not to do rather than which you have to do. So first learn which you not gotta do in the market. So that's all you need to keep in mind. And yeah, this trade is almost done now. Which if I would have take, I would have exited something here, almost like 2% more. But yeah, this is FOMC, so anything can likely happen. The market is so uncertain, and we might get stuck in a limbo. Yeah. So okay, so talking about that, I'll mainly not trade on the FOMC and I avoid trading on the weekends because the weekends the markets are not open, right? So you got to check this one. So there is an asset called SPX, US 500. So this one is literally the god of every asset in the market. This one is literally manipulating every stuff. So this one is off on Saturdays and Sundays, so you can't trade these stuffs and you can't trade forex also. Like liquidity is pretty high on these stuffs because there are a lot of option traders and there are a lot of institutions in the US and UK playing around on these. So I just take a trade whenever this is active. So this one is active only on the week. So the weekend is really shut down and weekends there'll be no bails. And yeah, so you need someone to move the market, right? You need the market makers. We can't do anything in this market. We're just retail traders. We need someone to just give us an impulsive move and just throw off their liquidity, like a $1 billion liquidity in the market. So we just have to follow them. We just have to get into the train and we just have to exit the trade before they get on. So that's the plan here. So like try to trade on Monday to Friday and try to avoid trading on Saturdays and Sunday. Even the market is open, just take a break of 2 3 days because the more you're going to focus, the more you're going to get exhausted and you will not be in a good emotionally. You'll not be in a good emotional state. So that is also one negative factor which will affect your tradings. So these stuffs are like one of the demons in the market. So just eradicate these stuffs. Yeah. And all right, no issues. Like there's one more thing which is happening. there'll be a lot of trades. If you look onto these patterns and if you get into the 15 minutes and stuff, there'll be literally a lot of trades. You could literally get a lot of trade. And but yeah, as I said, ask yourself, like, is this really worth it? Like, is this really based on my good risk to reward? Like, take the quality ones. You don't want something which is super weak and which is something super less in volatility. And look at this. This is literally a wave. You don't need to, just avoid when you see something like this. When you see these big wicks, means there is someone playing with you in the market. So you're gonna get easily manipulated in the market. So just try to avoid and try to set rule of like stick with some good patterns. So these are all some good patterns you could trade off with. And just observe a lot. So whenever you just open the trading view, you just don't want to trade. It doesn't mean you have to compulsorily, you have to mandatorily like trade and earn some money. Nah, it doesn't work that way. Just observe. If the checklist is all working properly and if you ensure all these things are which is gonna work, and if you're confident enough, then you gotta trade. You don't need to be overconfident too. And confident and overconfident both are not the same in this market. What confidence is, I'll tell you about that. So when this is here, so when this is okay, imagine I'm, where do I get a good example? Okay, so this one is pretty good. So imagine I'm taking a trade here and I'm keeping something over here. I'm keeping like a one or two. I'll be keeping here on this area with the stop loss here. And you entered this candle and you saw these red candles, right? So if you're gonna get off of this trade before even hitting the stop loss, you're not having confidence in the market. So this means like you have lack of confidence, and to gain more confidence, you just gotta build your strategy. No other ways. You just need to have experience in the market, like at least 6 months. Just try it. Just talk to the price. Literally, price will talk to you at one point. So make sure you work on this. So if you're gonna exit, you're likely to have less confidence. And what overconfident means is, I'll tell you about this. Hmm, let me get a good example for this one. Okay, this one is going to be about the overconfidence. So you're going to enter a short trade here, right here, with a stop loss of somewhere around here, and you're going to aim the previous resistance, which is over here. And this one we can assume which point of interest. Point of interest in the sense there are a lot of liquidity line in that area. So let's assume we are entering a trade here, and it works perfectly with this candle, and you are predicting that the market is going to go here. Your stop loss, you have to, your strict stop loss is over here, and price exactly reverses when touching this area and it's going up. And if you are a good trader, you'll just respect your stop loss and you'll exit here. I was talking about overconfident, right? If you are overconfident, you will be still arrogant with the market that it has to go down here, and you will be extending your stop loss here, and, and you'll be extending all the way. You'll be literally fighting with the market like that it has to go down based on your theory. No, it doesn't work that way. The market doesn't need to follow your rule every time. It's the market is do the its own volatility and liquidity plays every time. So if you're overconfident, you'll just stick with this trade and you just fight with the market that it's actually have to come here. So that is overconfident. You don't want to have that and risk the trade all the way here. Imagine if you would have stuck with this trade. GG's. I'm pretty sure you're not going to stay till here. Even if you're going to stay even till here, it's still a down play. So you have to be so strict with your stop loss. Just need to set the levels, and you just need to say goodbye to the trade and just move on to the next one. You don't need to take a trade right away, thinking the market is likely going to pump. And what people do is they saw the price reverse, right? So they just take a long trade here, somewhere here, and it seems everything is going well. Target will be here, and when they see this red candle which is almost going to drop, it's kind of different on the previous market, but when on the live market it plays like 10x more the effect. So it'll not work the same way. So what people think is like it's going to drop, and they'll just simply get out of the trade here, and then the market goes all the way up. So you got to have that confidence, and you got to have this. You don't want to have this overconfidence. So there are two factors you have to have in the market: confidence and overconfident. Just simply eradicate the overconfident. Yeah, this one seems to be going well. One which we had set over here. Yeah, this one. Okay. So what's next? And let me pull up some more examples. Yep, yep. Yep. You should not be trading. You should not be taking any trades on this day. So I was telling you, right? You're like, if you have a solid conviction, you can scalp here. You don't want a long here. You don't really want a long here because it could do anything. Because I'm still expecting on the downside. Overall, the trend is intact. I'm expecting BTC to touch 30 at least. Check the daily. I'm expecting BTC to touch this area over here. So it's so untouched and virgin, right? So price is getting attracted to this one, and we are gonna see BTC till here. But what likely can also happen is we have an imbalance here. We have a solid virgin candle over here. So what could happen is price could come here, and where is mine? Then it could go here, or it could directly go here and then fall. I'm pretty sure it's not gonna break above these zones. So yeah, like I explained someone in the chat, like assume a magnet. Imagine this one is a magnet. This one is north and this one is south. So this one is gonna act as a repelling force. So whenever price literally touches here, so it's not going to be attracted. How does it going to be attracted now, right? So it's going to repel the price. So what's likely to happen? That's what you call support and resistance. You can have a different perspective on this. So in order to clear these stuffs, we need to be stronger than the previous magnet. So the players over here, these guys have the exit liquidity, where they're going to exit off their prices when price is going to hit here again. I mean the spot players. There are a lot of exit liquidity, especially in Bitcoin. So we don't we don't want to go up right away. So first we need to clear these stuffs, clear these magnet and get more superior on this trend, and then we can see some pullbacks and something like that, and then we can see a bull run or something like that. I'm pretty sure it's not going to happen anywhere soon, but yeah, anything can happen in this space. So the weekly, yeah, this zone over here, max to max price can go fill this area and then it could come back down. And on the downside, I'm expecting this one. I probably think this will not happen, but if you say technically, this one should happen. We need to see the 12K BTC in order to see the next moon or Mars, whatever it is. Before that, now. So in case there is one more thing also likely to happen. So if there is going to be a straight pump above this, 99% it's going to be a fake out. So what happening is the market makers, they're going to manipulate you, that we are actually in a bull run, and they're going to pump the prices above this, and y'all will be joining with them thinking we are going to see the $1 million or whatever Bitcoin it is, and y'all will be joining, and they'll right away sell off everything here, and you will be stuck here. So you don't want to do that. So you don't want to chase the candle. It's okay, even if it's going, let it go. We need to make sure whether it's going to crash or whether it's actually going to hit, because 99 it's not going to be a proper uh, breakout. So yeah, that's all about on the weekly and daily. So this one should work, which has a good potential. Now let's get back into the 1 hour. Okay, the price is still stuck here. um it's plain with this area right now. Okay, so we don't want to trade now. I'm not getting input signals here, so I just simply protect my capitals instead of betting something and losing my port. Even if you're taking one trade a week, make sure it's like super quality, like which has a proper risk to reward, like 1:4, or something like 1:5, 1:6, and all. Like it almost makes your whole month if you're having a good capital. If you're gonna invest for some good capital, and if you're aiming for 1:5 or 1:6, yeah, one is enough. One good trade is better than 10 imbalanced trade, which is going beyond your checklist. So you don't want to do that. So that's why I aim, like most of the days I don't trade. I just simply not trade. It's not like you have to trade really. So I just aim for like one or two a day. So sometimes I scalp, but most of the times I do swing, because swing is always king. So I just take like 6, 8, 10 trades a month, not more than that, and it'll be around like sometimes I'll be losing like 4-5 also, and sometimes I'll be getting a win rate of like 8-9 also. So it completely depends on the market, as I said earlier. It doesn't mean that it has to work properly and smoothly based on your strategy every time. And also, if something is not working, if something works pretty fine on the first two trade, and if it's not working on the second two or three trades, just don't dump the strategy right away, because you'll know the strategy, you'll know the effect of the strategy, and only on the threshold of the trades you're going to trade. So try to take give an attempt of like 30-50 attempts on that particular strategy, and just judge your opinions on that, whether to have that or whether to kill that strategy. So just don't keep on switching and hovering around the strategies, thinking you'll find a holy grail. Holy grails doesn't really rely on that. Holy grails rely on this stuff and this stuff. The first and the last is so important. The first one is also so important, as important as this one. So that's why. So you just need to be a bot. That's all. It's hard, I know, but yeah, you could try improvising yourself on that. So yeah, I guess I pretty much talked about all of this checklist. I know I'll be going in depth on some of the stuffs maybe in the next upcoming sessions. So I just don't wanna scatter all of the topics on one session. So we can open on this session to Q&A. So does anyone have any doubts regarding these stuffs on anything on these stuffs? Someone can be lucky enough to get a lender list if they're gonna ask some questions. So let's see who's gonna be that. Okay. Sorry, you mean like you need the indicator? You need this one? I didn't get you. Can you come again? I guess your voice is kind of chucky. Oh yeah, yeah, yeah. I told you on this session starting, right? I'll be sharing this indicator on your on my chat, so it's a no-brainer. Yeah, you could customize it as you wish. You could really type whatever you want to type and make sure and just turn it off. That's it. So do we have anyone else on this? Yep. Okay. So I'll tell you the concept on these stuff. So what's happening here is on the 4 hour and the 2 hour. So when the market makers is actually moving the market, it's not that easy to move the market like literally 10-5 percentage, right? So the market is not going to be having a proper momentum when compared to the 15 and 1 hour. So that's the main reason why they advise newbies to not jump into scalping, because there'll be a lot of fake outs and stuffs in scalping. You'll have to play it so versatile, and you have to keep things perfectly on your strategies. So once you make sure, once you get the conviction on these 1 hour and 4 hour, you can just get into 15 and 5 minutes, and you can try these trades. Look at here. So the reason why I told you, right? Look how choppy it is in 5 minutes. Like you're not gonna get something here. You're not gonna get a potential setup over here in this zone on 15 and 5 minutes. Like this is on 5 minutes. So that's the main reason to just not jump into a trade. But you could always do that. But try building some perfect strategies on 1 hour and 4 hour, and don't feel that way that 1 hour and 4 hour is not actually likely to be as in order to keep you as a pro trader. It doesn't work like that. 1 hour and 4 hour is the best in the market. Like that's why you used to say swing is king, right? So aim for like good moves in the market, like 4, 5, 6% is something like that, and you're done for the month, instead of betting something on 5 minute like 1:1 poor risk reward and something like that. Yeah, that's pretty much about it. Yeah, yeah, yeah. Uh, okay, so you're talking about how to trail your stop loss on these stuff, right? Okay. Yeah, yeah, yeah. We do call as trailing your stop loss. We can also call as trail, or we can also call as trim. So what trailing means is like I'll give you an example on this. So imagine you're entering a trade here and your profit target is over here, right here on this blue line. So what happens is I told you about the levels, right? The three zones, the take profit zone, which you have to actually manage on your risk management. I mean in your trade plan, you have to enter 1, 2, and 3. So you can set something 50, 75, 50, 25, and the 25 on the last. You can also play it one till the last if you find a good momentum. But what you should actually do is like, imagine this is my first target, and this one is my second target. So what happens? I'm just entering a trade here, and here I'll be out 50, right? So yeah, I'm done. So I just secured my 50% of my port here. And what's likely going to happen is the next thing what I'm going to do is you have to make sure that you have zero risk on your trade. You don't need to just stick with the same stop loss. So on this zone when price reaches here, so what I'll simply do is I'll just move my stop loss over here, same to the entry. So that's called trail your stop loss to the entry. So now you're risk free. Now you have zero risk. You still have 50% profit. You have secured 50% profit, and still you're not going to risk anything because you moved your stop loss to entry. Because the reason for that is when price is likely going to change the momentum, when it's going to change the trend, it's most likely going to go down and hit your stop loss. So why to just wait till your stop loss get hit instead entering like exiting on your entry? You could also re-enter the trade again if you find a good potential setup. So you should follow this rule. Yeah. So trail your stop loss here, or you can do something over here also. Like if you find the trade is gonna, if you find trade gonna reverse, like in between the stop loss and entry, so you could try risking a least, like a very small. I don't wanna risk more. Like so, my actual stop loss is here, right? So imagine I'm reducing the stop loss to 50, like trimming the top loss to 50. So you could also do that, but I'd suggest you guys to move to the entry. And it also depends on the quality of the trade you're taking. Like on a 1 is to 1 is to 1, 1 is to 3, 1 is to 4, you have to ensure this. You have to do this mandatorily. You can't be keeping your stop loss till here. But yeah, it doesn't. It's so subjective, so it works differently for everyone. But I tried doing this. Exit 50 here and trail my stop loss and just let my profit till run till here, and yeah, it's achieved. That's all. And I'll not don't be, and just simply set these levels. Price seems like it's gonna go up, but most of the time it's not gonna. Just follow the rules. Just exit everything on the levels as you marked. Yep. Awesome, man. Uh, yep. Yeah. I could hear you. What's up, man? Yeah. Yeah, I do check the SPX because most likely it's going to follow the same. But sometimes when you see the dollar index, it does Bitcoin does exact opposite to that because the value is really getting low, right? So I simply check SPX, but I'm not gonna do a deep dive and analysis on this because, of course, the more you do, the more you're gonna get lost. So I just check the trend, what's happening on this. But most of the time, I do check is this one. This one is called total to the market cap. It's a combination of every crypto assets in the market, and it just gives you the pattern on all the stuffs except BTC. And there are two ones. One includes BTC and one excludes BTC. So I just keep this. I just do an analysis on this one, and I just find the trend. So when this is actually working on the perfect direction, and I just simply get into some alts and confluence this chart and the alts chart. But yeah, as I said, I'm just not gonna dive deeply onto these stuff. You don't wanna overdo stuffs in the market. It's so simple with whatever indicators or strategy you're using. Yeah. Yep. Cool, man. Let's get one or two more. Let's see. You could also type it on the chat. I'll reply. I'll try to keep it on here on the video. And yeah, I also said about the market structure, right? I do have a complete session on the market structure, which I did like 2 weeks before, I guess, which is available on the webinars. You guys can check it out. I'll be talking about the market structure, the first one, I mean the third one, the trend, how to identify that. I'll be going on to that deeply in the upcoming sessions. I'll be explaining about each and every stuffs a bit in a complex way so that you guys will understand the end-to-end products. What's you gonna get, what you gonna get in that. So yeah, I guess that's pretty much about this session. So I just need to make sure y'all get these stuffs. It doesn't need to be the exact same. You can also add some more stuffs, and yeah. But whatever you do, just try to not overdo it. The first view, the first impression, it's gonna be the best impression in the market. Like when you just pull up the chart and just see the trend, see the price action, the first stuff, it gives you the signal, right? So just stick with the signal and build your analysis on that. The more you look onto it, the price is gonna say a lot, and it's gonna divert you in a lot of different paths and gonna get you lost. So that's the reason why I tell you guys to not do that. Yep. And that being said, I guess we can wind off this session if there are no more questions on this. And yep, I'll be posting this recording uh, on the webinar tomorrow, so you can have it. You can have one more second. Yeah. So I'll be posting this video on the webinar, so you can rewatch it. And if you all have any doubts, you can always hit me on my chat. I'll be there 24/7. It can be anything about trading. It doesn't mean to be on a specific topic. Like if it's psychology or if it's gonna be risk management, you can hit me on any of the masters chats, and we'll guide you guys. Yep. So I hope there is someone's gonna ask some question. Is there anything? Oh, that's cool, man. That's cool, man. We're all in this journey. Hope we're all gonna make it, man. Amazing. Okay, cool. So yeah, I hope you all have an amazing week. And with the week, the price is also bleeding right now. Try to not take any trades. Just observe the price and do your analysis. Okay. See you guys.